Hello, dividend executives. Welcome back. It is Monday. The stock market is open, so you already know we are trading some options and we're reviewing our plays from last week. I did not get to a video on Friday because Tesla was getting beat down, and I thought it would be better to just let my options expire worthless and sell some new options today. So the account is currently up today, about basically $1,100. Mostly because we had a pop on some miners, we had pop on Bitcoin over the weekend, and we have a little bit of a green day on Tesla, which is good because it absolutely got destroyed after earnings. So we're going to jump into a little bit of the Tesla stuff and a little bit of the plays that I have on the table. But first and foremost, we are going to go over some of the plays I had for last week, right? So we are going to look at, I sold some, let me come down here. I sold some covered calls last week. Those expired worthless, and sold some new calls today. Just want to go over those. I also bought some more shares per usual. I'm always buying more shares, and just to lower my cost basis. So we sold the call last week. We sold 2 at the 240, which was super safe. Going into earnings, we got paid $134 in premium for that. And obviously, Tesla tanked, so we are nowhere close to that, and that expired worthless. You can see the expiration here for 00. So we kept the whole 134. We kept, obviously, all of our shares. And then this morning, I went for a 205 call, which was around that 0.1 delta at the time. And we can actually view this position here. Let's see what the delta is on that now. So the delta is at 0.06, so it gives Tesla a long ways to run, but we still collected some income on our shares, and that's all I really care about. So we collected $72 there. So between those two right there, that's over $200 worth of income. And we just keep at it. So we give Tesla some time to rebound. Hopefully we get a nice gap fill. Tesla left a lot of gaps on the way down, so we have a gap fill that we want to fill between the 193-ish mark and the 206 mark after earnings. And so hopefully we get into that, and I'm trying to give myself enough room to get to the top of the gap fill. So that's the play there. And then, of course, just keep buying more and more shares, right? So I bought some shares here. This was at 211 on the 19th. These shares I bought, one share at 188, which is crazy. And Tesla is currently trading at 187 right now. So I really should buy some more shares, but I'm just trying not to load the boat too much. So that's the Tesla play for the week. The 2 calls at the 205 at the 0.06, 0.07 delta, and we still bring in some income in, right? So we're good to go there. We have $673 worth of buying power. And then another play that I made is, let me just pull this up. We had Mara expire as well. Let me pull up Mara. Scroll down to the history here. We had a put expire worthless. The 13.5 put expired worthless, which means I paid nothing to get out of them. I could have closed them for $4 or $1 a contract on Friday, but I decided to just let it expire. So I closed some and I let others expire, right? So we had the 21.5 calls expire, or we're going to expire at the 42. We ended up closing those out, and then we sold some new calls at the 21.5. So that's looking good. And then let me just do this here on the Roth IRA so that we don't see some of the other plays as well. Okay, there we go. So we had the short puts out there that expired worthless. These were sitting at what, the 14.5s, and everything's just been expiring worthless. So we had some puts expire worthless. We had some that we bought back for $3, and these 13.5s, we let expire worthless. So that's the Mara play. And then as of right now, this morning, like I said, I fired off the 2 Tesla 205 calls. We're up $8 on those so far. We have these longer dated Mara plays. I sold these for $219 back on December 28th. So this was a long play at a safe delta. And we're up $201 on that, or 91.78% of the position on the position. So this is just going to theta decay away. I really have no reason to close this out unless I see Mara struggling, but Mara's currently at 1854. I don't think it's going to get to 15. If it does get to 15, please let me have the shares. But if not, I'm just going to let this decay a little bit more. Right now, theta is decaying it away roughly 3 cents a contract. So a day, if all things stay equal, then, in the next couple of days, I'll be able to close this out. This expires this week, and so I'll probably roll it out another month. But this has been a good one. That's a nice return on my money. I mean, you think on $4,500, I'm making $200. So not too bad. Again, I sold that last year, so gonna let that one sit. This is the Amazon call. We had this in last week. This is the one that we rolled for a small credit. Actually, a small debit, I'm sorry. Or no, yeah, a small credit. So we rolled it from the 150 to the 155. We obviously went like 2+ weeks out on that, and we bought ourselves some time. Amazon has earnings this week. Most people are saying that they're going to beat this week. We can look at that a little bit, but it's looking good. Probably 160+ million in revenue. So if I'm deep in the money on this, then we will just do the same thing we always do, right? We'll just roll this position up and out. I can go, if we went out to, I'm going to have to go probably out to the 23rd maybe. So I could probably, I could roll it. If I rolled it to the 160, that's going to cost me $145, but it buys me $500 in share appreciation. If I roll it out even further, let's say if I went to March 1st, I could go, still not a lot there, March 8th maybe. So I get my credit or my debit a little bit smaller when I go this far out. Now this is only going to cost me $53 and it buys me $500 in share appreciation. For me, this is a long-term hold. Obviously, this is a Roth IRA. I can't touch this money for like 45 more years. So I have so much time on my side, and rolling calls is totally fine by me. So I'm just going to see how earnings goes and see if it's like kind of buy the rumor, sell the news kind of thing with earnings, if maybe it'll settle out or drop down. But right now, Amazon's trading at 160, so I think that'll come down over time. If they absolutely kill it and they beat all expectations, then it's going to moon, and that's okay. I'll just keep rolling it. So I also have odd lots available as well. I got 10 shares of odd lots on Amazon. We're currently up $5,254 on the position. So I definitely could sell 1 share of odd lot and move my strike around, which is what I might actually do. I might just use the odd lot strategy because we're up 42% on the position. So could definitely do that. But yeah, those are the plays. And then my last play that I made this morning was Riot. I sold a very safe-ish Delta put, short put. I got paid $7 per contract. I made $40 on this, and the Delta is 0.11. So very possible I could get assigned here. Happy to get assigned, or I could roll down and out, but that's what we're looking for, the Riot position. But these are the plays. I told you I was going to talk a little bit about earnings. So I wanted to talk a little bit about Tesla, and I'm going to pull up a few things, right? There was a couple of things I wanted to do, and I posted this on Twitter. This was one of them. This is for Tesla, and we're just looking at how much cash they have on hand. I think it's important to see things like this as a company. We went from 2015 having $1.2 billion to now 2023, $29 billion worth of cash on hand. This is a company that has $29 billion worth of cash. So that was one thing I wanted to look at. Their cash on cash is just looking great. And then I posted before earnings. Let me come down here a little bit more. Right here. So a couple of things that I took away from the earnings call. They obviously missed on a bunch of stuff when it comes to earnings for expectations on Wall Street, but there are things that are doing really good, right? So the energy and storage is outpacing the auto growth, which is huge. Production costs are dropping. They're seeing deflation in the manufacturing side of things. So lithium prices are coming down, and that is going to help their margins. The street hated this, but they gave no production estimates for 2024. They talked about how the ramp of the Cybertruck is going to be slower because it's more complex than maybe the Model 3 or the Model Y. And then Elon Musk he was on Twitter the other week, and he was talking about how he wanted more control in the AI segment, and he kind of walked back those comments a little bit. He just more wants voting control. He doesn't really necessarily need 25% stock comp or anything like that. So these are just some of the things that I think are important when we look at the company, some takeaways from the earnings call. And the company still has a lot. One last thing I wanted to look at, I was actually looking, I can just pull this up. I took a screenshot. I was looking at I was looking at the statements earlier, and this is on page 94 if you want to go look at the actual earnings report. But I like to jump into the 10Ks or the 10Qs, and I like to look at some of the nitty-gritty numbers. So one thing that I really wanted to point out was the energy generation and storage segment. You can see the difference here, right? So in 2021, we had a gross profit of negative $129 million, 2022, $288 million, and then in 2023, $1,141 million. So I mean, that's over $1 billion in 2023. That is huge growth. That's almost that's more than, yeah, almost 4x growth. So these are things that we need to look at. These are things that I think are really important when we're looking at the company. There's a lot of people that really look at this Tesla as a company and they say, this is just an auto company, right? And it's not just an auto company. You can see that their energy generation and storage segment, the revenues are climbing like crazy, almost doubling in a year. And the gross profits, which is how much they're actually taking away, are growing even more. So this is crazy to see them over $1 billion here. Anybody that says that this is just a car company is just valuing it wrong, in my opinion. And this is just one case of that. So that's what I wanted to go over today. Those are the plays I have for this week. It sucks kind of to see Tesla go down, but at the end of the day, this is part of investing. Stocks go up and down, especially with Tesla. The premiums reflect that. And obviously you have the Elon Musk saga as part of it, but long term I believe in the company. Obviously, as you know, I would hope to get back to cost basis. I hope we can do it here in 2024. But if not, I'm just going to keep collecting my income each and every single week. Last week we collected 130, 134. This week we collected 70 for the short week, a little over 70. And even if I could collect $100 a week, I mean, that's still $400 a month in income. And I let my shares appreciate in the meantime with those deltas, right? So that's what I'm doing for now. Hopefully we can have a nice breakback on Tesla. We can start getting some positive news, and hopefully the rate cuts come because they are so dependent on rates in the auto industry. We need the rates to come down. So hopefully we can get some Chair Powell news on that as well. So thanks everybody. That's my synopsis for today. That's what I saw with the Tesla earnings and the breakdown I saw and how I'm playing it going forward. But appreciate everybody for tuning in. Don't forget to drop a like or a comment, and happy investing. We'll catch you next time.